Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. In today's video, I'm going to look at a company called Medifest. This company is one of the companies that you guys have asked me recently to look at. I used to own this company in my portfolio a long time ago. I think in 2020 I came across the company. At the time it was doing absolutely amazing, and then it just went down with the rest of the markets. Okay, so what I want to do is first I want to share with you guys the kind of give you an overview of what the company does. Then we're going to look at the financials, and then I'll give you my opinion at the end, inshallah. If you haven't joined us on the Patreon yet, please do it, and thank you to everybody that has joined us so far. And also, if you have already subscribed, because I know some of you have already joined the membership level, but you haven't actually joined us yet in the Discord account, so please do that as well. That would be really helpful, just to have the community of like-minded people to share good, what we're doing and so on. And I'm going to start commenting on basically a couple of things that you guys said in the last couple of days. I mean, today I just came back from work, and work is absolutely killing me right now, but inshallah life goes on. I'm recording it now as we speak. I don't care. Inshallah, I'm going to keep doing this as much as I can. And even though work can be tiring at sometimes, I do actually enjoy doing this, and hopefully we'll all get something out of it. Right, so let's have a look at the general overview of the company, and then we'll take it from there. And also don't forget to subscribe to the channel and like the video if you haven't already. Right, so this is the company that we're looking at today that you guys have asked me to check out today. So if you look at the just year to date, you can see it's just down about 3%. For 1 year, it's down about 40%. Okay, but for the 5 years, it's up about 70%. So if you bought it when it was trading $80 per share, right, basically you will, I think you know, $65 per share at the basically about in 2018. Right now you will be up about 70%. But it was around this time when I bought it. I think I bought it when it was about 200 something. It got to, no, actually it was around 300, I think. And I sold it when it was about 300. Since I actually sold it, crazy enough, I only had 3 shares, I think, at the time. And I sold it. As soon as I sold it, it's actually gone downhill from there onwards. And I think it was just before the entire market went down. It wasn't just something to do with this company. The overall market was actually down quite a bit since then. Right, so let's now have a look at the financials. So the company, what do? They are one of the companies that, to be honest with you, I didn't know much about it until a friend of mine mentioned it to me. Then the more I researched about it, but the more I like the business model. But I don't know if this is one of the companies that doesn't have any white mode and so on. So that's why I kind of got out of it. But it manufactures and distributes weight loss, weight management, healthy living products, and other consumable health and nutrition products in the United States and so on. The company offers loads of little products. It's just like your oatmeal and breakfast kind of stuff, pancakes and pudding and soft serves and all of these things, shakes and smoothies and soft bakes. They do all of that. And not only that, they also have a section where they have their own kind of coaches, where basically you can have a video conference, like a chat with them, and they'll tell you what you're doing and what you can and so on. So they have like a one-to-one conversations with people that they're helping out. So yeah, it seems a really interesting business. If you know a lot about the weight loss kind of management side of it, and you know the demand in the US and Europe and so on, then you probably are a better position than I am. But I don't work in that industry. So if you know more about it, well done to you. Maybe it's something to look into, inshallah. And as you can see, basically the graph has gone basically down since in the last 365 days. So it's in the consumer cyclicals. That means is they sell products that are not necessity for a lot of people. Current trading $111 per share. A year to date, they're only down about 3%, but the 5-year return is 75%. We've already seen about 70 to 75%. Okay, EPS is $12.73, which is absolutely huge when you think about it. And they have 1.1 billion market cap, so they're not actually a huge company if you think about it. They have a narrow economic moat. I would think this company will have none. But it looks like it has a narrow economic moat according to Morningstar. Beta is actually just above 1. And then PE is only 8.77. The forward PE for this company is 9.38. And the 5-year average is 24. So from 24.5 to 8 right now and possibly 9 next year based on their projected earnings. That means the company is really cheap. It's literally half of where it should be probably. And price to free cash flow, we're looking at 6.9. Let's call it 7. Okay, so this company is based on these value matrix here. Again, we can't just rely on this. There's other things we need to look at, but based on this and based on the 5-year average, it seems really cheap, because that means is way less than where it was in the last 5 years. Okay, according to the sector, which is about almost a 23 PE. In terms of dividend yield, this is where this company shines. Okay, and this is one of the reasons I actually owned it at the beginning, but then I realized the markets were quite volatile at the time, and I wasn't sure whether this company will be one of the companies that I can hold on to even if the markets go down, because I didn't believe much in the business side of things. Like company like a Home Depot, for example, if it went down 20%, I know I will be buying more of that. J&J, I will do the same thing. But I wasn't sure about this company, so that's why I sold it at the time. But it has almost a 6% dividend yield. At the time, I think it was about 3%. So because the price went down quite a bit, so the yield went to the opposite direction. Latest increase was 15% and 5-year growth rate of 35%. I think the only other company that I know that's better than this company in terms of the 5-year growth rate is Broadcom. I think Broadcom has got 39 or so. But that is absolutely huge, 35%. And the annual payout is $6.56 for every share of this company that you own. Don't forget, this company is only 1.1 billion. In fact, I just want to double check that, because that seems really low, right? Yeah, there we go, 1.19, so 1.19, that's it. That's absolutely crazy. But when you look at the ex-dividend day was basically 19th of December. So since then, obviously they paid. So the next one, they haven't announced it yet. I think the dividend growth rate basically is 7 years. So they have increased that dividend for 7 years in a row. And 5 of that was basically they've increased to 35% on average. So payout ratio, 51%. Which is actually not bad at all. And dividend safety, though, is only 45%. And that is one point that I will say is a negative about this company. And the second one is the free cash flow. But although they're a very small company, relative to their free cash flow, that's not actually bad. And it does cover the dividends, 177 million, right? But free cash flow yield, I've not seen any company, even the big boys, do not have a free cash flow yield of 14.7%. We normally say 3% is okay, but this company actually has a better free cash flow yield than most companies out there. Profit margin is only 9%. Operating margins are quite low as well, but return on equity is actually quite good. Okay, because they return a lot of values to the company, to the investors, I guess. Total return in the last 10 years was 19%, which is absolutely huge when you think about the type of business this company has. And the revenue growth in the compound annual growth rate in the last 5 years, we're looking at almost 40%. Some companies are like 10%. If they're lucky, if they got double digits, whatever. But this company is 40%. So either the company grows too fast and is now slowing down or whatever, but we will see when we get to what the analysts think about this business. But it's grown really well, and it's got excellent dividend. Okay, they can cover that dividend, although the safety, according to Simply Safe Dividend, is actually quite small. Okay, they also have current ratio above 1, which is basically fine, and it covers the current liabilities in the next 12 months. And check this out, according to Yahoo Finance, they're expecting the earnings to grow about 10% this year and 20% next year. Price in terms of Simply Wall Street actually is saying is undervalued almost, let's call it 46%. So $202 is where it should be, almost a doubling where it is right now from double. According to Morningstar, it is discounted right now about 28%. So $151 per share is where they think the price should be, based on the projected earnings and so on the free cash flow. But according to TipRank, okay, and Seeking Alpha, both of them are not a big fan of this company. and each one of them is actually saying almost a 16% downside going forward. So they're expecting about in the 90s, 94 and 94, basically exactly the same. Okay, and it's a hold according to Seeking Alpha based on them. In terms of Sharia compliance side of things, business is absolutely fine. It is 100% according to Zoya. Interest bearing debt 2.34%, which is very, very low, and interest bearing securities 5.89. This is a really interesting business if you think about it. Okay, and basically the financial don't look that bad. The company does only 1.19 billion, and shares outstanding, they are buying back their own shares. So they bought it back a couple of times, and then they stopped it for a while, and then start buying back again. So if they left it for a bit, then started buying back. So it looks like this is a solid company. So every couple of years they buy back the bit of their shares. So they're not diluting your shares. They're paying you like almost a 6% dividend yield. Okay, on top of that is only they're spending about 51% of their earnings to actually pay that dividend. And the free cash flow here yield is absolutely amazing. So it looks like really a good business. So let's have a quick look in terms of revenue and where it's heading. So if we're looking annually, so it was doing really well, and the projected is now kind of a little bit of a decline. Okay, so $1.6 billion in 2022 to right now, basically next year they're expecting 1.24. So that's a little bit of a decline, but the year after it will bounce back by a little bit, $1.31 billion. That's the total revenue side of things. And then when we look at the earnings, so if we just focus on the actual, you can see the earnings per share is actually heading the right directions. And one of the reasons I'm sure a lot of you are probably like this company, okay, in terms of valuation, it actually looks cheap, as you can see here. But when you look at the PE side of things, but when you look at the dividend side of things, okay, probably this, some of you, why you're interested in this company is the dividends. Look at this, 2015, okay, 2015, they were paying 25 cents. And right now they're paying $6.56, which is absolutely madness. If you think about within a space of 8 years, they actually have increased that dividend massively. So that's that 9% that we saw earlier. So there are other companies that are in a similar sort of industry. So you would have to check these companies. I don't know much about them, some of these companies, but they all seem very small market cap wise. Okay, all of them seem very small. So 1.1, 1.4, okay, just in the millions, and $1.9 billion. So they're not really huge companies if you think about it. The company reported their earnings recently. So I think this was February 21st, so just last 6 days ago. And they actually beat the top line, okay, by almost $1.50. Majority of the companies lost money, but they actually they beat that, as well as they beat the earnings. But they were down, okay, the revenue, they were up, but they were down year on year. So this time, based on what they've done this time last year, they were about 10% down, but still they beat the estimate. So this is the basically estimates that came from the analyst. So they beat that. So the revenue increased 4.8 to $1.6 billion. So the net income was good. So there's quite a lot of really good things about this company. And the business is one of those businesses that is kind of straightforward. But you will need to know a little bit more about the industry, I think. And then when it comes to dividends, they've actually declared the dividends around this in December. And that was basically, they haven't increased it at the time, but the forward PE at the time, forward yield, sorry, at the time was 5.3%. And they paid that in February, 7th of February. So as you can see, it doesn't look that bad at all. It's looking at the financials, looking at what the company does. I think this is a solid company. I think it probably is still growing. It would be interesting to see if this comes true. Okay, if it does, then I think this company is heading in the right direction. What would I do? I wouldn't get back into it. I'll be honest with you. In fact, I'm going to be transparent and I'm going to show you. I think I lost about 13 pounds at the time. So let me see if I can find that first. As you can see here, this was in February of 20. I sold it in January, so about a year ago. 2020, just before the markets were actually starting to go down. So 2.5 shares, I thought it was about 3, and I lost about £13. But they paid me £2.22 for the 2.5. I think it was 2.5 shares that I owned at the time. So 9th of February, basically around this time last year, I got out of it. It was about $200 per share. I thought it was a little bit more than that, but at the time it was $200 something per share. And basically since then it actually lost half of its value. So luckily I kind of got out of the right time. Anyway, I'm going to stop the video there. If you have not liked the video yet, basically like the video, subscribe to the channel. Let me know if you have any questions. And don't forget to join us, inshallah, in the Discord and the Patreon account. Have a wonderful day, and thank you for the support that you've given me so much. Have a wonderful day. Assalamu Alaikum.